What a day here at Banking 4.0. It was a very long day. Today we spoke about very interesting subjects. Yeah, congratulations to No Cash for having this awesome day with a lot of experts, managers, banks, technology providers here. Today it was all about the models in business innovation. And as we all know, tomorrow it will be all about payments. It will be more focused on payments. We'll speak from open banking to a lot of aspects of the payments innovation. Today we'll close this excellent day with hopefully the best panel. I'm looking to my panelists here. It is related to business model. The business model innovation in fintech. We all know that together with the technology innovation, it is also something that comes out is that the way in which the money are made within the financial ecosystem changes a little bit. And the banks know it. They fear a bit on our innovation, not only in the technology part, but also in the business part. That's why I have these wonderful people near me to speak about business innovation. And we will start by letting everybody know each and every model, each and every business, what are you doing, how you're disrupting the world of finance to make it a better place. And I will start with Eliad or Marilena. Let's give the ladies, yeah. Marilena from FlowX. Marilena, how would you how FlowX will make the world of finance a better place?
Okay, so thanks for this intro. It's also a pleasure for me to be here today. Before discussing in more detail about what FlowX does, I would say that I should just first introduce myself. So my name is Marilena Ignat. I'm customer experience executive partner in FlowX AI. I come, a bit of a background of mine, I come after 15 years of banking experience, where I kind of worked in two of the biggest banks in Romania that are also present today here. So that was also a pleasure for me to also be part of this event, where I've held several roles in risk management, project management, portfolio. I've led several implementation projects, transformation initiatives, and so on. So I think I got to know quite well the pains of both banks' customers as well as the employees of the banks in general. And after all these 15 years, I got to a decision to make quite of a big turn in my career. So I joined a startup, and not just any startup, a startup that I consider currently the most promising on the market for several reasons. That's FlowX. Why I think it's so promising? Well, actually, I think the results speak for themselves. In less than 12 months, we managed to raise one of the largest seed rounds in Europe with the help of our partners. What else can I say is that why is also, I don't know, why I see it as a super promising startup? Well, it has a very good team behind it, experienced people that have also built startups in the past, and they bring all that knowledge. And secondly, I think it's also about the market potential that we see. And I would like to say that it may sound quite crazy, but we are actually talking about the $1 trillion market right now. So there is such a huge potential to do all kinds of things there. That's why we just go for it right now. Now about FlowX, what FlowX does. Actually, we are helping banks, but not only banks, also insurance companies, and also all kinds of enterprises to build digital journeys for their customers and also for their employees very fast. That's one of our key, I would say, differentiators. We are actually promising a 10 weeks delivery time for the first digital journey, followed by around 10 days in building each digital journey after this first one. What else it is to say? I think our key differentiators somehow, or what we actually deliver to our clients is this time to market, so building fast, having a reliable and scalable opportunity for the products and services that we are offering. We are actually offering a unified front end, and I would say amazing experiences for both customers and employees. And on top of this, we are doing all this, addressing one of the key points that was mentioned, I think, here today by Vladimir Kalinov from Raiffeisen. He was saying that one of the key major pain points that the banks currently have, which kind of blocks them from really innovating really fast, is the legacy systems. So this is exactly what we are addressing, I would say, by doing and creating all these digital journeys really fast on top of the existing systems of banks and insurance companies and other companies as well.
Marlena, it's very nice, but how do you make money? Because it's about business models. How do FlowX makes money? It's services, they are doing consulting jobs, or it's a, I don't know, recurring revenue business model?
It's a recurring revenue business model, yeah.
Okay. So you are charging the banks after you implement something, you're charging the banks for the lifespan of that bank until they disappear each and every month. It's good.
Hopefully they will not disappear, but yeah, that's the idea.
Okay.
Actually, we are helping them exactly to tackle the point of not disappearing.
Yes, so you are helping the dinosaurs not to disappear. It's a good thing to do because right now we don't have any dinosaurs even in our zoos. I will go online at Bulent. How are you, Bulent? How is the weather? Where are you, in Istanbul?
In Istanbul. Hello, everyone. Thanks for inviting me again. I guess it's a bit rainy day in Istanbul, but everything is perfect so far.
So I hope you have all your money in dollars because I heard all the news in the press for today. But we are speaking about business model innovation, and tell us, how are you doing business there with your business?
So actually, very briefly, for the last 2 decades, I'm in the fintech industry. I was the founder of the first electronic money company in Turkey, where I believe pay, send, spend, track was an issue, and only the banks could have those kind of railways. After I sold my last company with 4 million active users there, I saw a very interesting area where this embedded fintech will be the next thing. So I believe that every company will be a fintech company soon in order to leverage it. So as Colendi, we offer banking services to any retailer, telco, or an energy company, and make them a bank actually through their user base. And our only model is creating a joint venture, because we believe that creating value together is the way and key to establish this kind of a exponential growth. So for the last 1.5 years, we reached around 3 million users, delivered incredible 4 platforms live in Turkey.
So 3 million, Bulent, million. We are speaking in millions.
Yeah, 3 million.
Yeah?
3 million.
Wow.
3 million, yeah. Not bad.
Not bad, yeah. And you are present only in Turkey, or are you an international footprint company?
So we just raised our Series A with $38 million in bank, and we are a UK company now, but we are going to focus on Turkey for the time being. Open 2 more markets in the Q1 of 2022. So we are only operating in Turkey, and until we are the undisputed market leader, we will definitely focus on Turkey.
And let's go on the business model question. How do you make money? You are making money from, so your customers understand that there are some businesses and you embed the lending offering in their offers, yeah? So you make money from where?
So we make money through transactions. So we have the pay, send, spend, track free for anyone using our platforms. For example, one of best partners is Migros. Migros is a retailer in Turkey with more than 2,600 retail stores. And their loyalty program is running on our wallet. So this is called MoneyPay, and we are giving credits invest features like fractional share ownership or savings features through subscriptions or transactional revenue. So our model is, depending on the product, we offer all kind of payment services free of charge, but value-added services like credits, buy now, pay later, or microcredit, or micro invest. If you want to buy like 100 Turkish lira Tesla, you can buy it through it. But those require subscription services or transactional additional fees.
Excellent, thank you very much. Let's go to Fagura. Christy, how are you? How are you today? How are you disrupting with Fagura the world of finance?
Good to see you again, Cosmin. I mean, we haven't seen each other for a while, and thank you to the event organizers to having me tonight. Fagura has started as a peer-to-peer lending platform in Moldova, in a city I was born in, Chisinau. I left many years ago, but it's still close to my heart. It's been started with the idea that people need to earn by helping others. And essentially, if we go back to the concept of peer-to-peer lending, it's supposed to be a very democratic way to lend money and earn an interest. The Moldova scene is overcrowded with non-financial institutions that charge borrowers anywhere between 30 and 1,000% a year. And we think it's unfair. And that's how our CEO, Tudor, launched the company, and to address that particular niche. Well, I say it's a niche, it's quite big, the non-financial lending in Moldova. So we operate in Moldova and we originate loans for individuals. So that means any natural person can come on Fagura, fill in a form, being assessed by our credit score, and then we give that loan to investors for them to decide if they want to allocate their capital. And the business has been very successful for us over there, proven by the the number of accounts. We have around 30,000 accounts opened on the platform in less than 2 years. And we also managed to secure funding from investors all over the world via Cedars in London. And we are in the process of preparing our next round of financing. And in order to do that, we are coming along to Romania. We are preparing to apply for a crowdfunding company here with the local authority. Unfortunately, the regulation is not there yet. We're in a bit of a delay, but hopefully we can touch upon that later on. And we are essentially trying to capitalize on the knowledge and the credit scoring we developed in Moldova, build it up here, and start lending to businesses, but using the same principle of helping small companies and earning something back. And we firmly believe that capital should flow and people should earn anytime they take actions in their lives. So this is fundamental to our values.
Thank you, Christy. And how do you make money? Indeed, so it's like you take a bit from that credit that is lended?
That's precisely right. We take a small commission for originating the loan, and we also take a commission for managing or administering the loan. And at this point in time, this is the only source of income. If we come to Romania, maybe we'll add on other revenue streams. But for the time being, these are the only two ones.
Thank you very much. Let's go to Eliad. Eliad, how is Coriander doing business?
Doing well. So, as you mentioned a little bit about me, I've been in the payment industry since 2012. I've been a CEO of a payment service provider working mainly in Europe and in the US. After a couple of years, about 5-6 years there, I decided that I had enough about being an operator myself, and I can give a lot more value as a provider to other operators, and that's why we started Coriander. We're a payments-oriented user management system, meaning we allow onboarding of customers, merchants, affiliates, and connectivity to multiple acquirers and different processors. Most of our clients are PSP working globally from Cyprus, Malta, Costa Rica, the US, Singapore, and. We started recently, about a year and a half ago, to help EMI licensed entities in doing the banking side. So we provide the front end that it's connected to the different banking as a service provider. We aggregate 5 providers right now and about to do the central link direct integration soon. We also work with different KYC, KYB provider to manage the entire onboarding process for both the customers signing up to the EMI and for the B2B businesses doing the entire KYB processes. We've been doing it since 2016. In general, we do about almost 1 million transactions a month between the different operations. And how we make money, we are charging our customers on an interaction basis, meaning cost per transaction, cost per API call, and cost per bank transfer interaction. Everything else within the system and management is included in their pricing. The suite itself includes 9 interfaces, so every different type of a customer or different user has its own interface to be managed by the system. That way, we don't believe in one size fits all and just limited users in terms of functionality, but there's a dedicated interfaces for the admins, our main client, and they provide interfaces for their merchants, for their affiliates, of course the banking interface for their customers, and so on, reporting, and.
So you are a middleware infrastructure for PISPs and...
Backend as a service for everything, but we're focused on the user management on the payment side. So if we do the acquiring, the issuing, and the virtual IBANs.
Excellent. Thank you very much, Eliad. And very nice having you here. Let's go to Pacera. What is Pacera doing? How is Pacera disrupting the world of finance?
Good evening, everyone. It's very interesting about Pacera because the business model of Pacera is not to go against the banks, but a partnership with the banks. While Pacera in Lithuania got the first e-money license issued by the Central Bank of Lithuania back in 2012, we are joking saying that all the fintech madness in Lithuania started from Pacera. Here in Romania, for example, we are a franchise of Pacera, and we are also having the same strategy as the mother company from Lithuania. We are trying to partnership with the banks. Actually, last year, back in the summer of 2020, we were the first fintech that launched Romanian IBANs in partnership, Romanian IBANs for the companies, very important, in partnership with a local bank. So this is
your customers are usually merchants and companies which are using your services.
Most of them we are targeting, yes, companies. We can offer our services also for private persons, but our target are companies.
Okay, and you seek for the friendship of the banks, not for their money directly.
Exactly. Okay. Because this is how we are doing our money, because we are targeting companies not only from Romania, but from countries that are near Romania, like Bulgaria or Hungary. For example, most of our Romanian IBANs are allocated right now not for Romanian companies, but for Bulgarian companies or companies all over the Europe.
It's nice. In Bucharest, you know, there are a lot of Bulgarian plates at the cars. So Romanians are doing plates for the cars in Bulgaria, and the Bulgarian companies are doing IBANs with the Romanian.
Exactly.
We have a very good, nice mix of different business models. We have businesses that are working for the banks to help them get fit in this ecosystem. We have also companies that are doing certain services which are at the edge, at the near the core banking services like crowdfunding and what is doing in Turkey your company. And how do you think this will really impact the way in which the banks will change their business models? Do you think they will stay conservative to their money making from their existing ways of doing money, or they will have some transformation in the way they think their own business models. Let's start with, I don't know, Marlena.
Thank you. So I think in terms of the banking system in general and traditional banks, just looking at the, I don't know, overall world GDP, for example, and the weight of banks' revenues in this total GDP, it's really decreasing. And you can see it not like from, I don't know, 12 months ago, but it's in the last 5, 10 years. If you look at it, it's simply decreasing. So for banks, I don't think it's a question of if they will survive or not. I think it's a question of how can they grow in the current context. And I think, just to put it simple, banks, traditional banks need to kind of learn how to walk and chew gum at the same time, meaning that they need to kind of keep their operational business and core business in place, meaning dealing with legacy systems that we are talking about, and at the same time come up to the customers with new products, meaning innovate, find ways how to change maybe their business models, how to go to the market with different things, how to approach exactly their business from different angles. I think somebody was also mentioning today in one of the panels about what if we are maybe trying to look, or maybe we are trying to start thinking of banking from the job that needs to get done from a client perspective. Maybe we should not look from just the products, giving the client a credit card or, I don't know, mortgage product and so on. But it was mentioned, for example, this example of buying a home. So this is actually the job that a bank needs to do. Exactly.
Yeah, I want a house. Yeah, I don't want the mortgage
exactly.
loan.
All this journey, if you look at it from this perspective, involves much more steps and involves looking at the entire process as an ecosystem and gathering several actors throughout the way, and not just offering a mortgage loan, for example.
Yeah, but I believe, very nice what you're telling, Marlena, but the point is, there was this golden age of banking in which they tend to make all the customers kept in their ecosystem of products. They were building products for the sake of, increasing their revenue models, and that's it, their profits, and that's it. Yeah, building products to pump up to the customers. And right now, because of these technology players, the customer tries to understand that it's not about I don't care about your product, my bank, my dear bank. I care about taking a house, and I don't care how you call and how your procedures are, because in the end, how long it will take me to take the house. Eliad, what do you see here?
Actually, if you look right now, most of the big banks, if not all of them, have innovation departments. They took ex-entrepreneurs, people that did something before that, usually in fintech, and then they built a department that's sole purpose is to find innovation outside the bank, because they understand that the bank is old school, a big whale that can't move fast, and trying to do those kind of things with those innovation departments. Some even have accelerators that work with the startups to try to incorporate those services within the bank. I don't think a lot of those innovation departments will help the customers, the individuals, but the services that they bring in, helping a lot the small businesses. You see a lot of focus from the big banks. They say, listen, I can't help the customers that much getting a mortgage, not getting the house, but I can help the small businesses with additional services because I'm already banking them. I have the tools through these third-party startups to give them additional services and make a little bit of a markup. If not a markup, at least preserve the merchant to keep, let's say, that corporate to still work with the bank and not leave them. So instead of just making more money, it's not dripping money out and having those customers leave to the challenger banks and the new other banks that are they're a bit more services in general to put there. So it's not necessarily making more money and adapting their business model, but rather giving services to maintain and reserve those customers that they currently have. Because if they won't innovate, if they won't bring new services, they're just going to remain obsolete.
Yeah, taking your example, Eliad, what you're doing is democratizing a part of the infrastructure which was very closed for the big banks. Yeah. So you're doing right now, you're making it available for smaller players in order to have the access to the rails of money that only the big banks were having initially. So this for sure, it's something that disrupts a bit because, opens up the place for some others to enter at the same table of transacting.
As an example, what we do with one of the local providers in Israel. So they offer a processing, as a processor and issuing program, but they're limited in the capabilities that they offer the fintechs in terms of the set of APIs that they have. They actually refer to us to give the same fintech a lot more services in parallel. They don't charge him anything. They just say, listen, we have a partnership with Coriander. They give you, if we give you 30, if the bank gives you 30 APIs, Coriander offers an additional 200 on top of that. So build your offering with that. We won't charge you extra. We're even going to give you a discount on the setup because we already know that Coriander is integrated. There's no effort on their end. So on their end, they're just referring to give that fintech a little bit extra services and even giving them a discount on the other side, because the alternative, the fintech will go to somewhere else that gives a better offering.
That's the smart way to see the collaboration and the complementarity of the services. But not all the banks are in that stage for now, for sure. And for example, if we are speaking about payments, and I'm going to Pacera, if you can pass the mic, how are the banks seeing you as a new player coming, also democratizing these infrastructures that used to be only proper, having access for the banks to use it?
Depending on the side, on which side the banks are, because our partner banks see us we said, real partners from which they are earning customers, and they are earning based on our clients' transactions. But those banks that don't want to partnership with us, they are seeing us like competition, tough competition.
There is a matter of size. So usually the long tail banks are going to collaborate, and the big banks that they think they are Superman, they don't want to collaborate with these little players.
This is the situation, because we are seeing right now that there is that Romanian bank that all knew that partnership with many fintechs and launch Romanian IBANs. This is the case also.
So it was a small bank.
Yeah,
it's a small bank.
It's a small bank.
It's not ING or
exactly,
or
exactly. And this is the same situation for Pacera in Bulgaria, for example, where we have a similar agreement with a local bank that provides Bulgarian IBANs for Pacera clients. Mm-hmm. So yes, usually smaller banks are more interested.
Do you have a good relationship with banks in Turkey? Are they seeing you when providing embedded finance for small companies, for companies there, for businesses? Are they seeing you as a potential enemy?
Yeah, it's very hard to tell you the difference between how banks treat you, good or bad. At the end of the day, we are trying to definitely compete with them and also cooperate with them. The model that in Turkey is a very sophisticated market, and banks are incredible technology departments, like 10,000 software engineers, and our banking system, online banking system, is definitely state of the art at the moment. And to compete with these guys are hard. So we choose a set of partner banks and then compete with the other banks, because we have a big market, 85 million people, 30% unbanked, underbanked, and hopefully the game will be changing with open banking and as well digital banking services, where companies like us will definitely create value together with banks who are willing to definitely support fintech companies. As a matter of fact, they see us as a competitor, and they don't want us to be alive and big. That's the case in Turkish market.
Yeah, so it's safe for them as long as you are a small fish. When you need to grow your size, they will start to look at you very directly. It's true. Even I know that the Turkish ecosystem is very technology driven. The biggest banks are very good at cutting edge technologies. I used to work for Garanti Bank from some years, and I know GT Technologies and what they are doing there in Turkey. It's cutting edge. You need. So in the meantime, you still have a big market. That's the point there in Turkey. You still have a big market, and so you can have your place at the margin of their offerings.
Definitely, I guess the market really needs renovation and innovation, and I believe the next generation of fintech is gonna be definitely the programmable money, and the crypto fintech innovations are definitely on the fintech area at the moment. And I believe that these kind of definitely new technologies will create a lot of game area for fintech companies in Turkey as well.
From Turkey, let's go a bit to Chisinau, to our friends from Republic of Moldavia. Cristi, tell me, you're doing decentralized finance in a way. Is this something that, okay, there is a good trend for it. Is this something that it is already in the radars of the banks? They are right now looking at it as a threat, or they are, I don't know, placing their money together with the residential customers on your platform? How is this seen from the banking collaboration perspective?
Yeah, I think it's a good question. But before I answer to it, there was a discussion about size. We all know it does matter, and also the fact that a bank is a bank and it will always be there, it's not a given. I mean, we're looking at Monte Paschi, the oldest bank in the world, on the brinks of default. And hopefully Mario Draghi will do a good job as a leader to make that merge with UniCredit happen. I think and you're right, Cosmin, we are in the business of decentralized. And who says that people cannot be at the center of their own power? So basically, what I'm trying to say is, we had discussions about bank ID. We had Nick from Landrise talking about the fact that people should own their data. And people should own their money. And there is a growing number of people who want to be in charge of their money. They don't really need custodies of the banks. And talking about decentralized finance, you know, there's a big rise in blockchain and all the technologies and the fancy words you've heard about. We are not trying to be smarter or to reinvent the wheel. All we are trying to do is basically empower people to invest and empower people to be in charge of their financial dreams. And I don't really see how a bank could do it, because a bank is there to make a profit. And yeah, if they want to co-finance loans on Fagura or other platforms, at the same time, why would they do it? So I don't think we are in the business of competing with the banks. We are in the business of empowering people, and I think that's the key sort of ethos we have at Fagura. And there's a bigger demand for our services, both in Europe and the US. I mean, we are late, if anything, to the table, but hopefully the whole idea of building on top of the crowdfunding platform is to build a community digital bank, and I think that's something that is going to drive our business forward, and that's something what we are going to speak to our investors about.
I want to approach you with another subject. It's like the last subject, and it's something that it's something that we should cover a bit here on the business model transformation of the financial ecosystem. And I will tell you like this: look, you see right now fintechs that are valued much more than the banks in Europe. This is something weird. Still, our business models, we all have business models, yeah? And we have proven business models. Still, our business models don't have that revenue levels that are projected in the business valuation of these fintechs. And I'm telling you, I'm trying to understand from your side, what's your position? Do you believe it is a bubble fintech right now in Europe? Really? Let's face it directly.
I personally think it's across the board. If you look at Tesla, it's valued more than Mercedes, Toyota, and Volkswagen, or Daimler, sorry, overall, it's like taken together. So it's in finance, it's in car industry, it's in technology, it's everywhere. Whether it's a bubble or not, it's difficult to say. I mean, we have a lot of money on the table with the printing and the low interest rates across the globe.
Quantitative easing, how is called this in the...
Sorry?
Quantitative easing.
Yeah, exactly. The philosophy is
philosophical term.
It's the nice way to put it so people don't understand, but it's money printing. So I think, if taking the financial aspect towards it, investments are about discounted cash flows. It's about how people perceive the future. And from that point of view, if so many funds are investing in these technologies, I tend to believe it's not a bubble.
It's not a bubble.
No.
Eliad, you are not in the fundraising right now with your company, but what do you think on this?
We've been bootstrapping the company since the beginning, since 2016, so haven't been chasing fundraising so far. At the beginning, I admit I did, but I'm kind of a cynic in terms of the multipliers, and I'm building a business, and that's what I always did in companies before that I established. Some are still operational, have been operated by other people that work for us, but in general, it's all a question of the value that the investors see. What is the potential and sometimes the connection? You have so many applications right now, services, they do expense management, pretty much the same thing. It's a prepaid card issued by one of Galileo or the other providers, other the processors over there, and then a nice UI around that and OCR.
And they are raising 110 million.
But at the end of it, there is a market, there is usage, there is revenues in it. If they justify the valuation at the beginning, maybe not, but it's a question at the end of it. You just have one investor who believes in it, and then you take it from there. Sometimes if it's the same investors coming in round after round, they inflate the valuation of the company just because they are the one investing again in a higher valuation, which that I think is usually the problem. Because if it's the same investors and there's not really much value that was added to the company, that's where you see the gaps, and that's what's going on usually in market. But I don't think it's a bubble yet. There are specific companies that you can put your finger on that you can say something's weird in the valuation. Like you saw with WeWork, etc. Everybody saw the uprising and then how it went down, and then right now trying to recuperate the company. But there's one of it, it's not fair to judge all of them just because of it. There are a lot of great companies with great potential and great growth, which the investment actually led the growth even more. So it's very specific. It's a case-by-case.
Yeah. I will pass the mic if anybody else can add something on this topic.
So from my perspective, I think it's clear that we are on a wave right now. There are lots of analysts who kind of know it better from economical, financial perspective, also from the history perspective, which say that there will be an expected correction in the following years. So there is a lot of, I would say, everybody talks about that. From a purely technology perspective, at the end, technology right now creates value in the economy, in the financial world, everywhere. So as long as, from my perspective at least, as long as there is something which creates an added value and it brings something to the economy, to the companies and so on, I don't see it, I don't see it going. And I was mentioning a bit earlier about the market potential that we saw on at least on the IT side. It's absolutely huge. Just thinking that only on the banking sector, for example, 80% of this whole IT spend that is happening at global level goes to maintaining, for example, these legacy systems that we are all the time mentioning.
They cannot unplug them. That's the point. They cannot put it out from the plug. They need to work with them and fine-tune them and put on top some other services. Indeed.
And they need help that, for example, we at FlowX can offer them.
Yeah.
Long-term to kind of deal with this topic.
Yeah, thank you. Bulent, do you think it is a bubble in this fintech ecosystem that we are living in or not? There is still a lot of value to be created here.
I believe that there's a lot of value to be created, but as always, there is a hype, and when there is a hype, there can be some bubbles. But I believe that the real deals are gonna definitely come forward, and the years to come, there will be like solid, sustainable, definitely state-of-the-art fintech companies that we'll all see.
Thank you, Bulent. And Daniel?
We are living interesting times with all these huge amounts invested in fintech area, and I'm saying all of this from the perspective of Pacera, who is not since the establishment back in 2004. There isn't any euro invested
so
from
no, from the beginning.
Yes, exactly, and every year Pacera is announcing increase of the volumes and increase of the revenue, of the net revenue.
That's the clear proof that there is a lot of value to be done here. I wanted to address this because it's something in the air right now with a lot of valuations that are blowing up, and we are seeing only the edge cases like 200 millions, and but there is a lot of need for innovation in a lot of different places. Thank you very much for your contribution today. We are closing here Banking 4.0 edition for today. And tomorrow, stay tuned, will be a lot of interaction on the payments ecosystem and all the innovation that comes together with the payment. Thank you very much, everybody.
Take care.